The big banks have dominated the news over the last few weeks because of their huge returns they've made over the first quarter of this year, which maybe are not going to be sustainable when you consider, especially in the United Kingdom, that some of the bounce back loans that they willy-nilly sent to businesses that could quite clearly not afford it at the beginning of the lockdown period are going to have to start being repaid. But actually there's another important factor that really needs paying attention to, especially by forex traders. That is that HSBC, which is the 6th biggest interbank forex dealer by market share globally, has just sold its entire US division. Now, the US division is not a forex dealing platform. It's not part of the single dealer platform that exists here in Canary Wharf in London that powers a huge amount of tier 1 markets around the world. It's a retail banking division. So HSBC has jettisoned it. They've done that in various other markets too, and other forex dealers like Barclays did that some years ago, 6 or 7 years ago. They let go of their European retail banking division. Now, yes, as I said, they're retail banking divisions, but what does this tell us? It tells us that big, huge giants such as HSBC, Barclays, the big tier 1 interbank dealers, which are finding it hard enough to stick to their keep their market position as leaders when in the face of non-bank market makers coming up now, such as XTX Markets and Citadel Securities taking the top slots in terms of tier 1 dealing. HSBC is doubling down on its forex dealing business. Retail banking doesn't make it money. Forex dealing does. So you have there a company which is looking to get back towards the top and concentrate on its investment banking division, as are many other banks. So now we're starting to see a return to the capital markets focus that these particular banks used to consider their core business and are now considering again to be their core business. So here we are in London. We're going to start seeing a return to the definitive B book and the definitive A book execution models of brokers and banks, which can only be a good thing.